Welcome back, ladies and gentlemen, to Lotus Resources on the forefront of a new uranium super cycle. Joining us, as always, Managing Director Keith Bowes. Welcome back, sir.
Thank you very much, and thanks for having me back on again.
And always a pleasure, man. Happy New Year. We got a lot to kick off. Is heading into the end of last year. We kind of broke down exactly what Lotus was doing and just really breaking down the properties and getting into that uranium topic. But today I want to talk more about kind of the cash. We're going to talk about the balance sheet kind of questions, capital structure, talk a little bit about those Q1 expectations. And to kick this off, I mean, you guys are sitting on 88 million in assets, of which 28 million is cash against 3.3 million in current liabilities, which is obviously fairly robust, but very similar to a lot of the mining and exploration sector. But do you want to talk about how you're managing that cash? Any comments you can make on the balance sheet to offer to the retail audience here?
Oh, sure. So let me just quickly talk about the cash balance. And I think it's important for us to recognize that we actually have two types of different cash at the moment. We have what we call a restricted cash balance, and we have an unrestricted cash balance. Now, when we talk about a restricted cash balance, that's effectively $10 million US, which is associated with an environmental surety bond that sits in a bank in Malawi. So from a project perspective and from a working capital perspective, we can't actually touch that money because it's associated with, closure costs and all that kind of stuff in the future. But what we do have is the $18 million, and I'm talking Australian dollars here. Sorry for jumping around between currencies, but we have $18 million of unrestricted cash that's available to us. And we've been very, very fortunate over the last probably 6 to 9 months or so in that we haven't had a really high cash burn rate because we've had a lot of our options have been exercised, and we've effectively been able to maintain that same 18 million Australian dollar cash balance for like the last 9 months or so. Now, if you look at the program of work that we talked about when I was on last time, we speak here about doing our feasibility study. We've obviously got costs associated with care and maintenance. We've got our own corporate costs associated with it, and we've also been doing quite a bit of exploration work this year. So that dollars that we have at the moment will see us well through until the end of this year. And we'll also pay off, there's a further payment that we have to make to Paladin as part of the acquisition costs. So we've got more than enough money to see us through the next 12, probably even 18 months as well. So from that perspective, we're feeling very, very comfortable. And as I mentioned to you in the last time as well, if we look at the timeline of how we want to try and develop the project, our idea is roughly assuming that the uranium price reacts like we think it's going to this year, we'll probably be able to make a final investment decision about the refurbishment of the plant and restarting the plant back up again towards the end of this year, or at the very latest early next year, at which point in time we'll be then looking to do a capital raise effectively to cover the refurbishment costs of the plant.
Yeah, and taking an aspect from the uranium price, it looks like we're getting a bit of a rebound to start the year in a lot of the commodities. So that's a pretty good sign. I appreciate those insights. You want to talk briefly about the capital structure with the shares outstanding there, just to give some investors an idea between insiders, institutionals, and just the retail audience that owns your company?
Yeah, so and I appreciate that maybe some of the US crowd feels this a bit strange, but we have about 1.2 billion shares outstanding or out at the moment, which for an Australian company is actually not a large number. And I'll be quite emphatic about that. We don't see that as being a particularly large number. So our current share price of around 31, 32 Aussie cents, which is about 25, 26 US cents, we're sitting at a market cap of around 260 million US dollars at the moment. So we've seen a bit of a change in terms of our register. So I would have said probably about a year ago or so, we might have seen as much as 50 or 60% of our register sitting with some of the investment funds, but we've seen a very, very strong buy coming in from the retail, and a lot of retail from North America as well, which is great to see through our OTC board, has actually come in. And I think that's probably swung a little bit more to more like maybe 50 to 60% on the retail side, and more than 40% or so sitting with the investment funds and those types of things. So that's how we see things at the moment. And from what we understand as well, I think the retail is still a really good opportunity for us to increase the share price as well.
Yeah, and I think especially in this market coming from more of the Western side of the world here, it's a very big topic right now for the uranium subject. I feel like we're kind of in this uranium renaissance, right? Like it's having this second wind as people start realizing that it's it's less carbon emitting than solar is, and micro reactors, some of the stuff we discussed before that is continuing to drive some interest in the sector. On top of that note, do you want to discuss a little bit more about your Q1 expectations here, as we kind of just kicked the year off, just to give a little bit of insight on what we can expect coming out of this year?
Yeah, so I think it's going to be a really busy Q1 from a news flow perspective from our side. As you mentioned last time, we've got this exploration program that has now been completed. A lot of the samples have been sent into the laboratories for assaying. We're starting to see some of those results come back in. So within the next couple of weeks, I expect us to be able to put out an announcement about our exploration results from around the Kalakera resource. And I think on the back of that, we're likely to do a mineral resource update as well, which will probably happen in Q1 as well. We spoke a little bit about the rare earths last time as well. So there's a rare earth deposit or a rare earth anomaly that sits on our mining license where we did some exploration work as well. Again, the assay results from that drill program are pending. I'm expecting to see those sometime in February. I think we'll do a review of those and probably be able to announce to the market the results of those. And then we've got some more information coming out around our feasibility study in terms of some progress and perhaps some of the key achievements that we've had in the feasibility study. But of course, the feasibility study itself comes out sort of halfway through the year. June or July, we'd expect to be able to announce that feasibility study. And then rolling on from then, again, on the proviso of the uranium price, which we're very confident about at the moment, we'd then start to talk about some funding activities as well, and whether that be equity, debt, or a combination of those two. We'll have a look at it. And then, of course, we keep on our conversations with the various utilities. And we hope that within a relatively short period of time, we might be able to make some announcements about some of the progress we made with the discussions with the utilities as well.
Okay, so lots to look forward to. I really appreciate your time today, Keith.
Excellent. Thank you very much.
Always a pleasure. On that note, folks, if you have any questions about the uranium sector, what Lotus Resources is doing, let us know what you think in that comment section below, and we can bring them up to Keith at a later interview date. But on that note, consider subscribing for those future updates. Stay cool, stay awesome, and I look forward to catching you in the next one.